Hi everyone, Sarah Rentschler here from the TimeWise Colorado office. As the 2023 tax filing season is wrapping up and we're well into 2024, I thought it'd be best to share some TaxWise updates for the 24 filing season. So in this short video, we'll cover 5 powerful ways that we can impact our tax situation during the year. Timing is everything. Tax season is a time to report what happened in the past year. The time to make the TaxWise moves is during the year, taking advantage of tax-intelligent opportunities such as deductions, credits, and utilizing retirement accounts to build wealth in a tax-wise manner. Now on to updates to the standard deduction amounts for 2024. If you are single, your standard deduction amount has increased to $14,600. Married filing joint increased to $29,200, and if you're both over 65, your standard deduction has increased to $32,300. This higher standard deduction is in effect until the end of 2025. That's when the Tax Cuts and Jobs Act will sunset. Don't worry, we'll keep you posted as to where we see tax law headed at that time. We also have an increase to health savings account contribution maximums. Taxpayers with high deductible health plans can make a tax-deductible contribution to an HSA account. The increased contribution amounts for 2024 for single taxpayers is $4,150, family maximum of $8,300, and for those over 55, you're able to contribute an additional $1,000 to those already spoken for maximums. Something to watch out for though, if you are on Medicare, HSA contributions are not allowed. However, you are able to pay healthcare costs and premiums with an existing HSA account. We also have an increase to retirement account contribution maximums for the year. Let's talk about Roth IRAs first. Although contributions are not tax deductible to a Roth IRA, they do offer tax-deferred growth, and qualified distributions are tax-free. For those within the income limits, the maximum contribution amounts have increased to $7,000 for those under 50 and $8,000 for those 50 and over. The contribution phase-outs, that means your income has to be within these certain parameters, those phase-outs have also increased for the year. If you're single and your income's between $146,000 and $161,000, alternatively, if you're married filing jointly and your income's between $230,000 and $240,000, you're able to contribute to a Roth. Now on to 401ks. These contributions are both tax deductible and offer tax-deferred growth. The maximum has increased to $23,000 for those under 50 and $30,500 for those 50 and over. Now let's talk about Roth 401ks. For those with a 401k with a Roth feature and within the income parameters of a Roth IRA, contributions to both accounts are allowable for a potential combined maximum of up to $69,000. Among the expanded retirement savings opportunities, the Secure Act 2.0 allows for unused 529 accounts that are 15 years or older to be converted to a Roth IRA. That's subject to Roth maximums for the year and up to a lifetime limit of $35,000. Now let's talk about updates to credits, specifically the residential energy tax credits. Originally, these credits were available for 1 year only. Thanks to tax law updates, these credits have been expanded to years 2023 all the way through 2032. So what does that mean? If you make qualified energy efficient improvements to your primary home in those years, you may qualify for a tax credit of 30% of the qualified expenses up to $3,200. The credit has no lifetime dollar limit, and you can claim the maximum annual credit every year that you make eligible improvements until 2033. Now let's talk about the residential clean energy credit for a little bit. Costs for installation of solar water heating, solar electric, fuel cells, small wind, and qualified battery storage technology has expanded to 2023 all the way through 2034. There have also been expansions to electric vehicle credits pertaining to both new and used vehicles. Lastly, many states offer property tax breaks for homeowners over 65. Check with your county assessor to see if you qualify for those tax breaks. So, what does it mean when we say tax-wise? As we all know, there is a tax implication to every financial decision we make. At TimeWise, we take tax consequences into consideration with our investment management and financial planning processes. With that being said, please reach out with any tax-related questions you have. Bye for now.